Good morning. Good morning. Hope everybody had a great weekend. We're getting close to the end of the year here. I guess after this week, it's going to get pretty quiet, most likely. It's usually what happens, but let's see. So, hope everybody had a great weekend. All right. Oh, the Dow started with the Dow pre-market here to look at because this was the transports haven't been moving. They've been the real laggard, but we'll see if they can bring up the rear this week. We'll take a look at them. Anyway, as the S&P and the NASDAQ 100 pushed up to new all-time highs, the Dow was being rejected from joining the party. And I guess in part Boeing, which is heading lower even this morning. So we'll see if this can break out of this range here, if Boeing bounces or anything else brings up the rear. But this, I guess, could be a little bit of one fly in the ointment, but we'll see what happens. You really want to keep an eye on this area down here, right? Because we always talk about the 50% area of the wide range bar, and we've got this wide range bar in the majority of the broader market indices and a lot of sectors. So this was the news day, with the tweet and China, yada, yada. Sick of hearing about it. Anyway, prices rallied up there, and we've got the wide range extension bar, which cleared the high. So it's a breakout. And as we always do, we say, well, we want to see prices stay in the upper half. We get some tails, that's okay, but the candle body and the close need to stay in the upper half. And since we've got this pattern pretty much everywhere to varying degrees, a break below Thursday's low is likely to get ugly because institutions jumped in, right, all in, so to speak, on that news with expectation. That bar signals that there are expectations for higher prices, and we're not arguing with that because that's what the chart says. But we also know when expectations are not met, it can get ugly with a pattern like this. And the pattern being, the move up that started in October. It was the ISM news, and then Trump tweeting, well, I don't care if we don't make a deal with China until after the election. And then it begins to recover, where it could have set up a shortable bounce after the violation of the trend. And this unbelievably good jobs data, and prices pop back to the upside, and then the bullish consolidation, and then, oh, we got a deal, right? And it's a great deal, and everybody loves it. That's the kind of little Trump, impression there, and everything's great, and they want it real bad, and blah, blah, blah. And so now here's this pattern that we have that suggests higher prices. So, and any jiggles that go around here above that 50% mark is just that. Might look like something substantial on a 5-minute chart, but staying with the higher time frame, which is what we do as a swing trade, is to objectively say, look, if it jiggles around, whatever it looks like, who cares? As long as it stays up here and then eventually can continue to move higher, great. If it breaks below this level, it's going to be a problem. And odds are it's going to come back down here. And, that's not going to be good for the Christmas rally. Anyway, so let's continue. Spiders, kind of the same, but they broke out. Wide range bar. Looks like it's going higher. Kind of messy on the intraday. The weekly looks okay. We talked about the bottoming tail last week and the difference between this one and this one. And so you can go look at the old videos if you missed that. Qs, right, not quite as powerful or potent a wide range bar, but nonetheless, it broke out to new highs. And so still looking good, right? Maybe it gets up to 210. Maybe that is a whole number, comes into play. We shall see. And let's looking at the futures here, right? Pushing up. So we had the stall on Friday, tried to push higher, got knocked back down. Now it's recovered. I mentioned in the letter that the option traders, you can see here, right, this little bar up here, there was quite a bit of put buying into the close. It wasn't extreme, but still a positive sign, whereas there was a lot of call buying on the breakout day. Not unusual, right? But if there was this low number, right, a whole lot of calls being bought into the close on Friday, saying, hey, I have these high expectations that the market's going to go higher, so I better buy those leveraged options into the close. That would have been a little bit of a, not quite bearish, but a concern, right, that things might have got dragged down Monday morning, maybe into the 10 or 10:30 reversal period. But anyway, there was a little apprehensiveness there, climbed a wall of worry. And that's a good sign as prices are pushing up, meaning there's concern versus, hey, this is a no-brainer, to make more money. So let's buy some calls over the weekend. They didn't do that. So that's a good sign. Our internals here are neutral. They're not helping us, but the trend is up. And until they reach an extreme, it doesn't really matter what they're doing. So maybe 3,200, if they're getting closer to there, a whole number. I'd keep an eye on that just as a line in the sand on the way up to see how it reacts to. The NQs just look fine. They're continuing to move up here. Nothing wrong. Not even a whole, well, 8,600. So I guess that would be a line in the sand to keep an eye on. Here's your minor support, the pivot high that was exceeded. And we've got major support here and this little shelf here, which is really, look, that breakout bar, prices go underneath that anytime the beginning of this week. Odds are, it's going to go lower. It was probably some other tweet that just came out. YM, we already mentioned, is laggard, but it's trying to get above here to make that all-time high. So, going into the end of the year, we can have everything firing on all cylinders. Everybody can be bullish, and things look great, and so on and so forth. SPX, we'll take a look at it. Russell, continuing, right? It's grind. And as we always do, we look at the ETF to get a clearer picture as to why this has or should have the greatest potential, because, well, the others are making new all-time highs, but the idea of bringing up the rear, or what we call catch-up sometimes, the underperformer often historically becomes the outperformer as it joins the party. And so for that reason, you want to keep an eye on the transports and to see, while it doesn't have that void to the old high, keeping an eye on these transports getting through 200. Take a look at some of those transportation stocks and just, look at it, see which ones are showing relative strength, maybe the ones that can break out, or maybe they're bottomed out and they've been going sideways for a while and they could bring up the rear. So, we have what we call, or what's referred to as a top-down approach, meaning let's take a look at the broader markets, see what they're doing, take a look at sectors, which we can trade the ETFs or futures as far as the broader markets go. And then we even look at the stocks within those sectors and see which ones are showing relative strength, relative weakness, and apply the patterns that you always do. Crude oil continuing its grinding march to the upside here on the daily with big red bars being ignored, but still within this trading range here. And the energy sector, the oil service stocks, OIH, doing the best there. OIH, put an extra dot in there. Popping up here, coming off of the bottom versus XS, XES. Well, that came off as well too, but I guess XL, is it XLF? No, XLE is the most diverse, and that, as you can see, has been underperforming. So in any event, as long as oil continues to show some strength, and if it ever gets out of that range, these energy ETFs are going to be a go-to because they have been just junk this year. Every attempt has failed. Bonds are moving down as they're supposed to, but within this new range here, the wide range bar on Friday. So question is this beginning to bottom and turn up, which would then mean TBT, interest rates would turn down. And that kind of doesn't figure in with this. Well, I don't know about so great economy, but I mean, everything points to great jobs and blah, blah, blah. But that ISM is a concern, you know, where economy is contracting. So we've got these divergences between information. Nonetheless, you know, markets are going higher, but we want to keep an eye on this. And you can kind of see, right, this head and shoulders kind of top that's figuring in here. So we're going to keep an eye on that and see what happens. Gold is actually up a little bit with the markets pushing higher. Typically, they're going down, right? So last week or so, we talked about this W bottom, and it's been pretty choppy, trying to get through this congestion. Not unusual, but you know, trying to get through that halfway mark of that wide range red bar. So once, well, I shouldn't say once, I said if it holds in this area and gets through here, it should start to accelerate to the top of this area, because since there's a void. So keep an eye on that top of this area here. And GDX or GDXJ set an alert at Thursday's high, because if it clears that, it should start to pop to the upside. All right, and we're going to look at SPX. It's Monday, and so they're a little higher here. We really don't. Let's see here. Futures are at 31.93, just under 3,200. So what do we do here with this? As far as the call side, we need some type of a rejection of these highs, and some kind of meaningful rejection of the highs, meaning a breakout failure, an M top, something that creates a significant resistance area to consider selling a bear call spread. And since prices are moving up, the bear put spread may seem like a no-brainer, but again, I don't know if you guys have looked at whatever premiums are there, but as this is going up, of course, those premiums aren't going to be very attractive. Maybe they will.
Yeah, you said bear put. You mean bull put,
yeah.
shorting.
Yeah, and so now this support level down here is where you'd want to sell below that. But as always, you know, let's get a little bit of data here at the open and see if things stall on the way up. And ideally, well, if I'm thinking at some point, you know, hitting this 3,200 number, odds are they start coming down a bit, and that, you know, as they do, and then begin to stabilize, that would be a point to consider the other side of it. So there you go. All yours, Dan.
All right. Good morning. Yeah, I mean, things look great. All of our open positions are fine, with a big exception, and that is Boeing. Now, this was one we started with a call spread. You know, before this green bar, started with a call, or, I'm sorry, it was the gap down day. And then I didn't like the way it closed, and I said, let's hold our breath. And then the next day I said, if it trades over the high, let's leg into an Iron Condor by selling the out of the money put spread. We had the 335s, 325s. So now, unfortunately, we're getting whacked on the put spread side here. So we're going to just start off with our general rules using a 30-minute low. You know, we aren't going to be anywhere near max loss, but it's a nasty gap against us because of the, you know, time value. And you always have to ask yourself, kind of like we did with, was it Cliff? Yeah, Cliff Clavin. We said, is this a pattern where we don't mind taking assignment? And so when this thing gapped bad against us, it gapped under our stop. But look, it gapped to support. So I said that what we were going to do is do nothing. But I don't like that approach here. I mean, it's a big gap. You got this prior low. You got two prior lows here on the weekly. But this thing, I mean, the monthly, that could easily go to 300 bucks. So anyway, I'll be managing that. Someone on YouTube asking about shop. Yeah, we had a put spread last week, maybe one or two of them, and it looks good. It's, you know, not gapping over the high like many things are. Maybe 30-minute high day trade. It's for a new swing trade. I wouldn't do it because even though it burned off steam here, you know, 400 area, these prior highs, the weekly's extended, but you could consider a put spread. I think I actually looked over the weekend. You could do, you know, under Thursday's low, $5, $10 wide. Let's continue with gappers and news stocks. All right, Uber here. Kind of a bull flag here, flagpole. Here's my 30-degree trading range pullback. Gap into 29.10. There was some news that they're selling their Uber Eats division in India, I think. And then I always like looking at the cousins. So Lyft is a sloppy 1, 2, 3. I was looking at Insight this morning, and this, in contrast, just to point out, a beautiful 1, 2, 3 right here. You know, it broke its downtrend, 10 and 20 up, gap reversal, closing breakout, 1, 2, 3. That was a pretty one. BTI, the gap breakout was last Friday. I think we talked about this because I like the monthly. Monthly has room to 50 bucks. But it's gapping up again, making the entry harder. Goldman, 228. Gapping over these highs. That's 30-minute high candidate. UNH 289. That's a big gap. These things have been strong. Talking about Goldman, we have we're long BAC. We're long KRE. Or yeah, we're long KRE plus. Last Thursday I did a put spread for January. Whiskey up. I guess, I don't know if Winfrey's back in the picture with some news, but no great pattern there. TEN, there's not much volume here. Well, I thought before it was gapping over this red bar, so I got no interest in that. GOSS gapping down. I think this is a bio, 1771. I don't mess with bios. WC, one of these bottoming patterns, 87.76. Gap down, Friday's low, nothing to do there. IFF. Now, I actually got this trade. It's in the news. It's doing something with DuPont. I think DuPont is either merging or buying them. So I don't know why it's gapping down, but you know, who cares? But I got this from a subscriber over the weekend. They said, hey, Dan, this is a bearish 1, 2, 3. Can I short the low, or does the 200 MA prevent me? And I said, well, there is a prior pivot over there, but this was a bear gap, wide range bar, bearish consolidation in the bottom third. I said candlesticks and patterns and trends are obviously more important than moving averages. So I said the 200 didn't bother me. So I put this in as a trade. It's obviously going to be, it's not going to trigger. Well, here, let me give it to you, what the trade was. So that was the trade. We're going to short a bear call credit spread under whatever number I gave. Continuing, Nicker, I get this from Alex's list. So when we do want to short, it's always good to have some stocks in your back pocket. So Nicker, downtrend, relative weakness, declining 20 and 50, railroad tracks. I like that. MSI, another bear 1, 2, 3. This looks great. Shorting Friday's low. Looks great. So those are two beautiful short setups. I'm not doing them, but I'm going to keep an eye on them. So Nicker, MSI. MMS is another one. He trades whippy though, but what? It broke down. It's on a downtrend. This is a 1, 2, 3. Alex pointed out it's a deep retracement. That should not have happened. That should not have been 100% retracement of this bar. But you have a small W bottom. You got a wide range, igniting, and that's a 1, 2, 3 with a buy setup on the weekly. So that's worthy. Bio here getting whacked all the way down here out of October lows. WDC, W bottom at the low with a new low, which is a benefit, new low and snap right back. But you know, there's nothing to do with it now. PCG, I remember one of you mentioned this last week, and I said, I don't recommend you messing with this. This is the California utility, you know, bankruptcy, this and that. So that's getting whacked here again. I think the governor came out and doesn't like the bankruptcy plan or something. 2511, it's at all-time highs. That's, if we can maybe get a double bottom on the 15-minute, that might be interesting. GSK 4721, you're an ADR. I'm just gonna delete you. AXSM to extended. Wow, 85 bucks. Oh, that's a bio. Do you think, McGraw, do you think some people in these prior rally had some inside information? I would venture to say yes. DuPont 67. So this is a bullish gap, gapping over this red bar. Let's put that in a window. Our Apple, we have a bull call debit spread. So I am, let me give it to you all. I already sent out a note to under a 5-minute bars low. Let's sell another third. All right, Boeing, we've looked at Charlie Bravo. Coming out of a big old multi-week base, that looks higher. EIX. I like this wide range igniting. 100% retracement, consolidation. I like Friday's close. Morgan Stanley, we've been watching for a while. Big W bottom on the monthly. Target 55, that looks good. Now these next 10 stocks, let's look at them. It's 927. Barron's had an article, and these are their top 10 stocks for next year. Dell, that's surely not a core trade to us. You know, core, when you talk about a top stock for the year, I need a bullish daily, weekly, monthly. That's a core trade. It's on support, but look, we have a monthly. That's a kind of a head and shoulders. Left shoulder, head, right? That's a mess. But they're, you know, fundamental. They had Google on the list. Google's had a nice run from the, and we actually did a put spread on this gap up day right there. So that was a great trade. All right, so I'm deleting these if I have no interest in them. U-Haul is on their list. You know, who knows? It's the monthly's not a core to me, but you know, maybe you get a swing out of that. UTX, yeah, that could go, but I think we can find better. Pfizer, they have on their list. We can find better. RDS, garbage. CMCSA, look at that. It's garbage, garbage, garbage. But same sector. Here's one I found in scanning. Look at Disca. Yeah, that's worth watching. That's a better weekly, monthly. What else do they have? VIAC, garbage. Anthem. That one's not bad. It's a buy setup on the weekly. So of their list of 10, chart-wise, I like that one the best. Anthem. They had Berkshire in here, their expensive one, 338,000. But it broke out Thursday. Breakout daily, weekly, monthly. But Buffett's actually been he's underperforming just the spiders. And I don't know who's going to buy a $338,000 stock. All right, so of the Barron's 10, I only like one of them, AMTM. MA here, I like this as a put spread. Nice wide range breakout bar. And then I always like looking at the cousin. So here's Visa. Look, Visa looks good too. Sting, little buy setup here. There's the Disca we can watch. LOW. It's sloppy, but it, you know, breakout. It's surely outperforming his cousin, Home Depot. Oxy, still in a bearish downtrend if it can get under last week's low. PPL, I'm watching this to see if we get a 1, 2, 3. Has room, 37, 38 on the monthly. Intuit, we had a put spread on this and he stopped us out. And then when I saw this close, I was going to put this in as a new one, a new put spread for Friday, but there's no juice. Look at the bullish 15-minute, very bullish day on Friday. Yeah, see, I had chop here too to